how I made 1,000 trading Forex. All right, guys, so in this video, I'm going to show you how I was able to make over $1,000 trading Forex. And this particular trade, I was taking this morning, 19th August 2024, and it was on BTC pair and it was on short position. So I took 3 positions and amassed over $1,000. Right, so this is roughly like 2,000 plus, but now, so I'm doing this video not to brag but to show you what is possible and how you can position yourself strategically to trade just like this. Now you're going to learn 3 things from this video. The first is the importance of recognizing pattern, all right, and the pattern that I took and how you can duplicate this in your trade. Secondly, the psychological effects, right, and the mind psychology of this market. Also, you will learn the Fibonacci ratios, the fib level that I use to take profits, and also how you can duplicate this in your own trading. Now, the first thing you need to understand is that every genuine market starts with an impulse. This is a secret that we tell only to our mentorship class student, but I think I need to let you guys know that every healthy market that needs to move, we always start with an impulse. And the concept that we always preach about is that after an impulse is established, wait for a correction and the next impulse to play out. This is so simple, guys, that even my 9-year-old can follow this simple strategy. This is actually what we traded in this trade. All right, so what did we see here? First of all, we saw from this time frame an impulse here, a correction here, an impulse here. So when this was forming, we're like, okay, definitely there are 5 moves, for a trend. In most trend, before they can correct and gives you more waves. So we've seen a 1, 2, 3, 4. So definitely we should be expecting the next one to break this low before it will complete, but not necessarily a must. But actually what triggers this this sell was like when if I should zoom in here for you to see it clearly, and you will begin to understand the fractional nature of the market. All right, so once market makes an impulse, it corrects himself. So here we see this first impulse up, we have a sluggish correction down and another sluggish move up and this sharp down and this. So we're able to marry this together to equate this to be like this is an impulse, this is a correction, and this is an impulse. Okay, so as the market start breaking this high, I know, okay, definitely there must be a reaction at this point. And as Dama have it, we have this engulfing candle here. Immediately we have this engulfing candle because this pattern is completed, because I've seen a clear 3-wave structure and a engulfing candle at this point. That actually triggers the sell, and I know critically that the market is going to drop. All right, so we took the trade here, as you can see. Then the market went down and started retracing up. We didn't panic, all right, because I understand that this structure has over 99% of playing out every time, every here and there. All right, so and that's why we placed our stop loss here and we went out. So now the TP has been smashed and the trade closed, because you can see it was just one candle that actually triggers this TP level. And now why we decided to take profits at this point was based on the fib level that we are using on the 5th wave, guys. No, I believe this is something powerful. Now if I should take my fib from here, I always use this fib level anytime I'm trading the 5th wave, and this fib level is 0.135. okay, this is the level I use anytime I'm trading the 5th wave, because I know that every 5th wave are short-lived wave, because there might, especially in Bitcoin, that might go parabolic sometimes. It might just tap that 135 and bounces back immediately, as what happened. Now on other waves, but on other wave structure, I use 0.27, but on the 5th wave I use 0.135. All right, so you might start using that in your own trade and see how that plays out for you. But believe you me, this is powerful, guys. On every 5th wave, you will be more right than wrong. No matter where the market is about to reverse, it must start that 0.135 on your 5th wave retracement. All right, so that is what actually the thought process behind this and why we took this trade, and eventually it played out the way we expected it to do. Remember the summary that we saw this first impulse and we allow the market to give us this correction for this impulse to play out, guys. All right, so if you want to join our mentorship class, which I'm taking one-on-one student now, and I have few slots open, kindly use the detail below to contact me. I'll be glad to help you, to give you this great eye open on how to trade like the banks. Because for instance, in every impulse there is no transaction. This is where the transaction happens, and during this transactional phase we know exactly what will happen based on how the transaction is going. Okay, and that is the edge we have in the market. We don't react to what the market, we already know based on pattern the transaction is forming, then will not tell us with confidence what the next move will be. All right, guys, I believe this must have helped you to see what is possible and what you can do for yourself in the market. If you want to learn more of this, please don't forget to subscribe to the channel and like the video as I see you in the next video. Thank you.